Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 12th of February. I'm Stephen Carroll in Brussels.
And I'm Caroline Hepker in London. Coming up today, the UK economy grows by just 0.1% in another blow for Prime Minister Keir Starmer.
Nuveen buys Schroders, bringing down the curtain on the UK's largest standalone asset manager.
Plus, another investor cuts ties with global ports giant DP World over the CEO's alleged Epstein ties amid an intensifying backlash.
Let's start with a roundup of our top stories.
The UK economy grew less than expected in the fourth quarter, adding to the pressure on Prime Minister Keir Starmer as he fights to shore up his leadership. GDP rose by a modest 0.1% in the final 3 months of 2025, matching the equally weak growth recorded in the third quarter. Now, for 2025 as a whole, the UK economy expanded by 1.3%. UK Treasury Minister Dan Tomlinson says the economy is turning a corner.
The growth in investment in the UK economy was twice as high in 2025 than it was in 2024, up from 1.7 to 3.4%. That investment will drive long-term growth, and that's from both public and private sector. Yes, we've increased public sector investment. We need to do that in the UK. We've been living off our past for too long, our roads, our railways, our infrastructure. We need to invest in them, but alongside the private sector.
Despite Tomlinson's words to Bloomberg, the latest figures deal a further setback to Starmer in a week in which he has faced calls to resign over his decision to appoint Peter Mandelson as ambassador to the US despite his known links to Jeffrey Epstein.
Well, a UK government-owned investment firm has suspended its relationship with global ports operator DP World over the CEO's alleged links to Jeffrey Epstein. The move follows a decision by Canada's second largest pension fund to pause future investment with the company. With more, here's Bloomberg's James Woolcock.
Among the elite businessmen who carried on friendly, crude and sometimes disturbing correspondence with disgraced financier Jeffrey Epstein, few kept up their exchanges as long as Sultan Ahmed bin Sulayem. Emails show the men exchanged contacts in business and politics, attempted to broker deals for one another, and made explicit references to sexual encounters. Now, in the wake of those emails being made public, both the UK's Development Finance Bank, British International Investment, and Canadian pension fund Caisse de dépôt et placement du Québec have halted their investments with Sulayem's firm DP World. Bloomberg investigated the emails last summer, and Sulayem has not responded to repeated requests for comment since then. In London, James Woolcock, Bloomberg Radio.
The latest revelations come as the fallout from the release of the Epstein files continues to reach across governments, companies and universities. During a congressional hearing, US Attorney General Pam Bondi said there are pending investigations by the US Justice Department related to the probe of the late financier, but she did not elaborate. Now, during the hearing, New York Congressman Jerry Nadler tried to ask Bondi how many men connected with Epstein have been indicted.
How many perpetrators are you even investigating?
First, you showed it. I find it.
How many have you indicted?
Excuse me. I'm going to answer the question.
Answer my question.
No, I'm going to answer the question the way I want to answer the question.
No,
Your
you're going to answer
theatrics
the
are
question
ridiculous.
the way I asked it.
Chairman Jordan, I'm not going to get in the gutter with these people. I'm going to answer the question.
How many have you indicted?
The exchange between Jerry Nadler and Pam Bondi came as Columbia University said that it admitted a student to its dental school via what it called irregular process that coincided with fundraising requests by former faculty and alumni to Jeffrey Epstein. That revelation came after Bloomberg reported on a years-long chain of communication between Epstein's camp and senior members of the Columbia dental faculty.
Nuveen is buying Schroders for a total value of £9.9 billion. It means the end of more than 2 centuries of independence for Schroders, the UK's largest standalone asset manager. The money manager has struggled in recent years, facing criticism for its relatively high cost base and slower organic growth. Richard Oldfield, Schroders CEO, says the deal is aligned with the firm's values.
The cultures fit, the heritage, the 300 years together, so it's not just our two centuries of history. Nuveen comes with more than 100 years of history as well, and that actually helps us have very similar cultures. This is all about the City of London. We put that right at the heart of the deal, making commitments to the UK and London.
Schroders CEO Richard Oldfield speaking to Bloomberg this morning. According to a statement, the cash offer represents a premium of 29% over Wednesday's closing price. This morning, shares in Schroders are up by 29%.
Shares in the French luxury giant Hermès have risen at the start of European trading after the company reported stronger sales growth than expected in the fourth quarter of almost 10%. That's down to robust demand for its Birkin handbags. Hermès has weathered the demand downturn for luxury products better than its peers. All divisions performed better than expected in the fourth quarter, except for perfume and beauty, where sales fell by almost 15%.
The British Prime Minister has labelled comments on immigration by Manchester United's co-owner Jim Ratcliffe as offensive and wrong. A spokesperson for Number 10 also called on the billionaire boss of Ineos Chemicals to apologise for the remarks made during an interview with Sky News. During the conversation, Ratcliffe said the UK couldn't sustain its current population growth.
You can't have an economy with 9 million people on benefits and huge levels of immigrants coming in. I mean, the UK is being colonised. It's costing too much money. It will cause... The UK is being colonised by immigrants, really, isn't it? I mean, the population of the UK was 58 million in 2020. Now it's 70 million.
In that interview with Sky News, Jim Ratcliffe went on to argue that Keir Starmer needs to make difficult decisions to get the UK back on track. Data from the Office for National Statistics estimates the UK's population in mid-2025 was 69.4 million versus 66.7 million in 2020. Several Manchester United supporters clubs have condemned the comments, as well as the Kick It Out campaign against discrimination in sport. And those are your top stories in the programme this morning on the markets. The Stock 600 is 0.6 higher. The CAC 40 in Paris up by 1.1%. The DAX in Frankfurt 1.2% higher. Plenty of companies' earnings moving those markets this morning. Hermès shares up by 1.8%. Siemens shares up by 6.2%. Mercedes-Benz, though, their shares down by 2.7% this morning. And in France, Michelin up by 6.6% at the moment.
OK, well, in a moment, we'll be talking more about the Epstein files and the UK GDP data that we broke for you earlier this morning. But before that, on questions of imitations and copies, is it flattery to have something copied? Is it frustrating? Felix Salmon has been writing about this for Bloomberg Pursuits, and it got Stephen and I chatting. He points to this long tradition of artists copying each other through history. Of course, you had to do it by hand. It wasn't so easy if you didn't have machines or AI or whatever, but that perhaps it should be seen as flattery more than as something annoying as maybe Hermès might find it.
Yeah, and also Felix has pointed to this idea that perhaps as China's economic dominance rises or economic power rises, that we should be taking a more Asian attitude to the question of copies, look at the Labubus and Lafufus argument,
yes.
which are more sought after, which are more treasured by their owners. And even in the case of, counterfeit handbags, something that, of course, has been around for a very long time. Research by Italian professors of business and marketing have shown that luxury knockoffs can actually increase consumers' willingness to pay for the originals. Does that mean we should be more tolerant of a copy or not? It's a question worth debating.
Yeah, absolutely. Look, if I step on a Labubu or a Lafufu, they are just as painful, whichever one it is.
Are they the new Lego for parents of young children? Anyway,
yes.
Something that we will, I'm sure, come back to. But the question of counterfeits being examined by Felix Salmon, we'll put a link to that article in our podcast show notes. Let's dig into the latest UK economic growth figures now, though. GDP expanding less than expected in the fourth quarter, rising by just 0.1% as business investment shrank and services stagnated. Our chief UK economist, Dan Hansen, joins us now for more. Dan, what stands out for you in these figures?
Morning. A few things. Obviously, it was a little bit, at a headline level, the number was a little bit weaker than expected. We had ourselves expected a growth of 0.1. Obviously, consensus was 0.2. I think the broad takeaway with this is you had a year of two halves in 2025. You had relatively strong growth in the first half of the year, partly because of what happened with the tariffs and how firms brought forward production. And then in the second half of the year, I think it's very hard to argue that there wasn't a big role to be played around policy uncertainty, what might or might not happen in the budget at the end of last year that we got on November the 26th. And you see that in the private sector data particularly. So if you break down GDP into the government sector and the private sector, you see that the private sector was basically flat in the second half of the year. And I think that mostly reflects uncertainty about what was going to happen in the budget. And I think, looking forward, we can, talk about what might come next, but I think that is likely to be a temporary thing. And we think, our view at least, is the economy should, and we see this in some near-term indicators, should pick up in 2026.
UK gilt yields fell a little bit after that data. They're pretty flat now. Sterling this morning also gaining a little bit of strength against the dollar after the GDP figures. What do you think the data actually means for government? We heard from a Treasury Minister earlier today, defending the government's record, but this is really kind of bumping along the bottom in terms of growth, and the government's got to deliver for voters.
Yeah, absolutely, and obviously it comes at an awful time for Keir Starmer, given what's been happening in recent weeks. I mean, I think one really interesting thing about all of this, which I think the dynamic around the debate about whether Starmer will go or not, and still, if you look at in betting markets, the chances are that he will be gone by the end of this year. But I do think the narrative around the economy could potentially change in coming months if these survey indicators prove to be correct and it gets borne out in the hard data. We're pretty sure inflation is going to come down to 2%. So I think in the near term, the narrative might shift a little bit in his favour. Whether that's enough to save him, of course, is another question altogether. I think more broadly, if you look at what's been happening in the economy over the past 18 months or so since Labour came to power, the vast majority of the problem has stemmed from A, the speculation about tax rises, and B, tax rises. So, the government has to look at itself in many ways in terms of what's happened with the economy. On the flip side, I think there are some things that have happened that are positive, but the problem, things around planning reform and the like, and increasing government investment as well. But I think the problem with this is that it takes time for those to feed through to the numbers. And in politics, you don't have the luxury of that time. So it's a real challenge. But as I say, I think it's possible, at least over the next few months, that the narrative does shift in a little bit more of a positive direction, both on growth and inflation.
OK, Dan, thanks very much for joining us, our chief UK economist, Dan Hansen. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, let's bring you more on the fallout from the Epstein files. The UK's development finance bank, British International Investment, has suspended dealings with Dubai logistics giant DP World over alleged ties between the firm's CEO and Jeffrey Epstein. Around the world, politicians and business leaders are having to respond to revelations found in the millions of documents released by the US Justice Department. Joining us now is Harry Wilson, the Bloomberg reporter at the centre of our investigation that first uncovered the extent of Epstein's ties to the UK's former ambassador to the US, Peter Mandelson. Harry, good morning. You've been reporting on the story also around DP World this week, those revelations around the chairman and CEO's contacts with Epstein, which have consequences beyond Dubai. Tell us about what's been happening.
Yeah, so far we've seen two partners of DP World cutting ties. So we've, just as you say, had British International Investment has cut its ties and says it won't do any fresh investing with them. And then we've also had, before that, a Canadian pension fund that's also been a significant investor alongside DP World, also saying that they won't make any fresh investments until such time as an investigation or some kind of action's been taken by the company to look into these allegations against their chairman and CEO. So far, we've heard nothing itself from DP World, so it's radio silence there. But obviously, this is a very difficult position for them. They are a very prominent, very large company. They handle something around about 10% of global container shipping. They operate some of the UK's largest ports. This is a very, very, very significant business, and it's facing a lot of very troubling questions about the behaviour of its top executive.
Harry, we're still finding more revelations in these documents, and the deluge, if they came now, really not that long ago comparatively. Should we continue to expect more of these to come as you and other colleagues are poring over the details of what was released?
Almost certainly. I very much think we're probably only in the early stages, the low foothills of this scandal. There are 3.5 million documents that have been released. Many of those documents number tens to several hundred pages. So to think that we have in any way got a grip of what's in this cash and have fully I suppose understood it, put it all in context and found everyone or everything in there, I think that would be very rash for us to say so. So I imagine for the coming weeks, months, potentially even more than a year, there will be fresh revelations from this thing. It's a very, very significant cache of documents, and it will take a substantial amount of time for us to get a grip of it.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.